Hi, Dr. Saifu. We are Group 7 from Cost Basic Accounting and Finance. For our project, we are going to present the topic of financial statements analysis of Top Glove Corporation Berhad and Nestle Malaysia Berhad. In short, Top Glove is a medical company, while Nestle is a food industry. There are 4 objectives in our analysis.
In methodology, it has preparation of data and financial statement analysis. The data of the financial statement of two companies for 4 concurrent years are obtained by using KLS Screener and using Microsoft Excel to conduct all the financial analysis. First part is the tools of analysis, which are horizontal and vertical analysis. Second part is characteristics. All the formulas are shown. Liquidity is defined as the ability of a company to meet the short-term financial obligations of a business. Solvency measures the ability of the company to survive over a long period of time. Profitability helps us to measure the operating success of a company for a given period. The third part is comparative basis, which generally contain intra-company basis, intercompany basis, and industry average. For horizontal analysis in terms of intra-company basis, the interest and other income decrease significantly. Administrative and general expenses increase dramatically because Top Glove has made an effort into distributing their product in order to generate revenue. So, profit also increased tremendously in 2020. For the balance sheet, PPE has increased constantly and intangible assets have increased exponentially. Investment securities decreased steadily in 2018 and 2019 but increased sharply in 2020. The cash and bank balance has decreased significantly from 2017 to 2019, but they have sufficient cash in 2020. The change in trade payable of Top Glove decreased slightly from 2018 and to 2019, but increased sharply in 2020. For the cash flow statement, the percentage change of depreciation on PPE increased gradually. In investing activities, the purchase on PPE of Top Glove decreased slightly in 2018, but increased significantly in 2019 and 2020. In financing activities, the dividend pay increased slightly from 2017 to 2019, but increased sharply in 2020. They also increased their repayment but decreased their drawdown of term borrowing over the years. For the equity statement, the trend demonstrates that the percentage change of dividend on ordinary shares and share options grant under ESOPs is the highest in 2020. Therefore, the total equity of Top Glove increased gradually over the years.
For the income statement of Nestle in terms of intra-company basis, the net income slightly rose in 2018 and 19 but decreased significantly in 2020 as compared with 2017. For the balance sheet, the right of use asset of Nestle increased significantly in 2018 and decreased slightly in 2019 and 20. The investment is an associate increased gradually over the years. The share capital of this company remains constant for all the years given. For the cash flow statement, the depreciation on PPE and right of use asset has a tendency to go upwards over the years. Next, the expenses related to the benefit plan of Nestle generally rose significantly. The purchase on PPE of Nestle increased in 2018 and 19 but increased significantly in 2020. The dividend paid on ordinary share of Nestle remained almost constant for all the years given. The cash and cash equivalent at the end of the year increased significantly from 2017 to 18 but gradually decreased from 2018. For equity statement, the closing balance of total share capital did not have any changes among the years given.
Next, a percentage of the revenues is shown in this diagram for all the items in the Top Glove income statement from 2017 to 2020. The cost of sales is quite consistent until 2019, but it decreased significantly in 2020. Therefore, the gross profit margin is much higher in 2020. For the profit after tax percentage, you can see that it increased significantly in 2020. Now, this diagram shows the percentage of total assets and total equity and liabilities respectively. The total non-current assets percentage increased in 2018, then decreased until 2020, whereas vice versa for the total current assets percentage. Besides, the total liabilities percentage increased until 2019, but dropped in 2020, while the total equity as a percentage of total equity and liabilities increased in 2020. Now, let's move on to another company, which is Nestle. This diagram shows a percentage of the revenues for all the items in the income statement. The cost of sales percentage and gross profit margin are quite consistent over the 4 years. The profit after tax percentage is also consistent, but it slightly declined 1.98% from the previous year. Apart from that, the percentage of total assets and total equity and liabilities are shown in this diagram respectively. The total non-current assets as a percentage of total assets slightly decreased in 2018, but increased steadily in the following years, whereas vice versa for the total current assets percentage. This graph shows that the total liabilities percentage and total equity percentage fluctuated from 2017 to 2020. In 2020, the total liability percentage increased to 80.53%, whereas total equity percentage decreased to 19.47%.
Now I will proceed liquidity ratio for top group company. Current ratio in 2020 means for every ranking ratio of current liabilities, it has RM 2.01 of current assets. Next, highest inventory turnover ratio in 2018 means the inventory is being sold and replenished more frequently. Less cash is tied up in inventory. Hence, the liquidity ratio indicates top group able to service short-term application in 2020. From the data, top group has the highest debt-paying abilities, so better solvency because it has the lowest debt-to-asset ratio or equity ratio. Highest time interest earned in 2020 means it has sufficient interest coverage. Moreover, positive value of free cash flow in 2020, so top group can easily meet interest obligation and potentially take on additional debt. In 2020, highest percentage in profit margin and asset turnover leads to the highest return on asset. So overall profitability in terms of the income earned on each ranking ratio in asset increased. Return on equity improved its performance in 2020 as the lowest dividend payout ratio, so highest in retained earnings. Hence, top growth has high profitability in 2020. Okay, I will proceed with the ratio analysis in terms of liquidity ratio for Nestle company. Current ratio and asset type ratio is the lowest in 2020 and indicate that Nestle may not be able to service short-term obligations. Then the highest inventory turnover ratio in 2018 but lowest in 2020, so Nestle is holding its inventory longer in 2020 and takes longer days to convert inventory to cash. Next, Nestle has the lowest debt-paying ability and low solvency in 2020 because it has the highest debt-to-asset ratio and debt-to-equity ratio. Lower time interest earned in 2020 means Nestle has no sufficient interest coverage. Besides, the negative value of free cash flow in 2020 means Nestle does not have enough cash flow to meet interest obligations. From the graphic shown, fluctuating trend in profit margin and gross margin, decreasing trend in return on asset, lead to the decreasing in return on common stockholder equity. Besides, highest dividend payout ratio in 2020 makes Nestle have the lowest retained earnings. Hence, Nestle had lower profitability in 2020.
Next, we will go through the horizontal analysis in terms of intercompany basis. For the income statement in horizontal analysis, the line chart reflects the revenue are greater in case of top growth compared to Nestle because of service operation limitation on restaurant, hotel, cafe, and others during the moving control order. Secondly, the line chart shows top growth cost of sales was greater than Nestle over every year. Next, comparison changes in gross profit are greater in the case of top growth as compared to Nestle. The increment in customer demand is one of the reasons that the top growth business has become better. For the statement of financial position, an increasing trend in property, plant, and equipment every year occurs because both companies expand the use of PPE to produce products and services to make a profit from 2018 to 2020, which is a good sign for investors.
Secondly, the comparison trends in inventories are greater in the case of top growth as compared to Nestle. The rate of sales volume is higher than the rate of production volume because average demand is increasing and there is more space for inventory. Thirdly, total assets. The line chart shows the incremental growth of Nestle is lower than top growth because top growth invests all profit and fund to expand their business, while Nestle focusing on distributing more of their profit to all the shareholders. Fourthly, loan and borrowing also clearly show that the percentage increase of top growth is much higher in 2018 to 2019 because top growth is carrying out for a rapid expansion of production and finally improving and increasing the income of that company to pay off the previous debt in the future year. Other than that, top growth is a profitable company and the retained earnings can be used to pay the debt, propose the distribution of future dividend, or can be reinvested into business activity, while Nestle is said to experience a loss in equity in 2020. For the statement of cash flow, net cash flow generated for operating activity, the line chart indicated that top growth is more successful. Both companies gain profit for their main business, therefore they does not need to use their assets to collect cash. Apart from that, comparison of net cash flow used in investing activities show top growth is more aggressive than Nestle to expand their production line.
In 2020, both companies have the net highest growth in purchase of long-term assets and other business investment, which is a positive indicator. Lastly, Top Growth has more financing activity but less net cash flow than Nestle because they provide money for operational use or use cash for repayment of borrowing. Although Top Growth has negative cash flow, which is servicing debt, the company have tried to retire debt or make dividend payment or repurchasing stock.
Based on the vertical analysis, the cost of sales percentage for Top Glove is always higher than Nestle in the earlier years, but it dropped in 2020. Hence, Top Glove has the highest percentage on gross profit and profit after tax. PBE percentage of Top Glove is higher than Nestle in 2017, but lower for the following 3 years. While the cash and bank balance percentage was always higher in Top Glove, but lower in trade and other receivables. The total non-current assets of the two companies fluctuated among themselves, where both the companies have significant differences in percentage for all the 4 years except 2017. The differences of the total current assets between two companies were not so significant except 2018 and 2019. All the total current and non-current liabilities were much lower in Top Glove compared to Nestle except for the total non-current liabilities in 2018 and 2019. The share capital, retained earning, and lastly total equity were all higher in percentage for Top Glove compared to Nestle in these 4 years.
I will continue with the ratio analysis between Top Glove and Nestle. The first ratio analysis is liquidity. Based on the graph, Top Glove always had a higher current ratio and asset turn ratio when compared to Nestle from 2017 to 2020. The higher ratios of Top Glove shows that Top Glove has a stronger ability to service short-term obligations when compared to Nestle. Overall, Top Glove has better liquidity ratio than Nestle. The second ratio analysis is solvency. For the debt to asset ratio, in 2020, Top Glove has the lowest ratio, while Nestle has the highest ratio. For the debt to equity ratio, Top Glove peaked in 2019 but it's dropped in 2020, while Nestle has a fluctuating trend and reached its highest peak in 2020. Overall, debt to asset ratio and debt to equity ratio of Top Glove is lower when compared to Nestle during these 4 concurrent years, and this indicates Top Glove has better solvency than Nestle. In 2020, the profit margin and gross profit margin ratio of Top Glove shows a significant increase, while Nestle has the lowest ratios. Return on assets of Nestle is better than Top Glove in 2018 and 19, while Top Glove is better than Nestle in 2020. The high return on assets means that Nestle will be able to utilize its resources well in generating income. Return on equity of Nestle is higher and better than Top Glove during these 4 years, while dividend payout ratio, price earning ratio, and return on common stockholder equity of Top Glove is better than Nestle. But overall, Nestle has performed better than Top Glove in profitability ratio.
In conclusion, Top Glove has the highest percentage profit after tax at 441.2% in 2020 based on 2017 compared to the previous years. Nestle has dropped at negative 13.98% in 2020 based on 2017, whereas the other years were slightly increased. Cost of sales percentage of revenues in Top Glove was always higher than Nestle in 2017 to 2019, but it dropped in 2020. Hence, Top Glove gained 40.51 more on profit after tax of revenues than Nestle in 2020 due to the high volume of products produced and sold. Overall, Top Glove is to be able to cover its short-term debt obligation as well as long-term liabilities. Nestle has better efficiency in controlling costs and its pricing policy, but it has paid out more to its shareholder than earning income in 2020, which is an unsustainable practice. That's all from Group 7. Thank you.